What's going on, family and friends? Welcome back to another loaded episode. Today we're covering Ripple's head of public policy and government making waves. Mt. Gox begins repaying creditors. You're going to want to hear my take on it. Tether-backed German technology company, Northern Data Group, is in the crosshairs. The XDC trade network announced it completed its first pre-shipment financing transaction against a promissory note. Lastly, BlackRock CEO Larry Fink talks about navigating tomorrow's economy recently at the Aspen Institute. His comments remind me of a message shared by XDC developer Quincy Jones. So make sure you stay through until the end. And with that being said, let's have some fun. Let's get after it.
5, 4, 3, 2, 1, liftoff.
Hey everyone, welcome back to another exciting episode. To those of you who celebrated, I hope you had a happy Independence Day. I had a great time swimming and watching fireworks with the fam. Loved every moment of the day. Now, that being said, let's talk about crypto with the Merlin Market Crypto Update. The total crypto market cap is hovering around $2.1 trillion. There's been I'd say a significant pullback in the market. Bitcoin has fallen below 60,000, hovering close to 58. XRP is still posted up at the 8th spot at 44 cents per XRP in a definite buy zone, giving us the opportunity to buy 2 for a buck. I'm just speaking from experience. I personally backed up the truck using Uphold's application. I loaded up on my favorite digital asset. I know you know what that is, and that's XRP, baby. Not financial advice, but if it goes lower, you know what I'm doing. You know the drill. Dollar cost average up and down, building that generational wealth. And when I made that investment, I immediately received an email from Uphold confirming that transaction was complete. However, I still have to wait up to 4 business days for the funds to settle before I can withdraw my favorite digital asset to my favorite cold storage wallet provider, Descent. I put up on screen right now a picture of me holding my Descent hardware wallet in my office with the XRP Community Platinum poster in the background. Check me out. Woo! The reason why I have this picture up is just to show you I use Descent. I trust their product. I mean, I even used it today to wrap some Flare and delegate it. You can do some really interesting things with very interesting investments using their technology, using Descent. So not only is Descent my trusted cold storage wallet provider, but they are also the sponsor of today's episode. Descent is the easiest and safest hardware wallet that I've been fortunate to use so far. I love their biometric feature, making signing transactions secure and seamless. Descent supports all of the major blue chip cryptocurrencies, ensuring easy backup and recovery options. Check out the very top link in the description of this video. Again, the very top link in the description under this video. Check out the very top link to get 10% off your very own Descent hardware wallet today. Shifting gears, but back to Uphold, I put up on the screen Uphold's available payment methods. You can find these at support.uphold.com. The website again is support.uphold.com. Looks like the web page was updated a couple of weeks ago. This page confirms the available payment methods, not just for US customers, but for international as well. Deposits are all instant, it says. However, you can instantly trade, but withdrawal times are subject to settlement times. And in my case, it's up to 4 business days. So I got to wait 4 days until I can withdraw my digital assets to my cold storage wallet. And it is what it is. I'm okay with that. I'm just excited that I got to scoop up XRP at these competitive prices. Again, not financial advice. I'm just speaking from personal experience. Now, I'm going to play a quick clip of Ripple's head of public policy and government. Again, Ripple's head of public policy and government. Her name is Lauren Believe, or maybe it's pronounced Lauren Believe. Like, we believe Ripple and XRP are here to change the world, baby. Lauren gives a current update on the projects, including stablecoins, and what these advancements mean, not just for Ripple's business channels, but for globalization, for the world. Ripple is eyeing a global market that's in the trillions of dollars. Let me play the clip.
Ripple has enabled the crypto solutions for businesses around the world. We are in 67 countries. We've launched payment systems and pilots from Brazil, South Korea, Palau, and you have to really think about what that means for like the general globalization of the world. The next step is stablecoin, and we are really excited about this launch. We keep hearing from our customers, this is a customer demand, that they want a common dollarized method of transaction, and that is widely available and always on. And so we hope that this will be the right fit for our existing business channels. And there's so much opportunity here. Today, the stablecoin market is about $150 billion, and we have not entered that market yet. And we expect this market to exceed nearly $3 trillion by 2028. That was independent research that was done. And I think that clear demand is showcasing that the trust, stability, and utility from a company that is compliance first, which Ripple is, would be an ideal player. And we're looking to have this pegged to both the XRP ledger and the Ethereum networks. Currently, we are working very closely with the New York DFS, and that's a focus for us. And we are complying with all current law, mostly through the state level. But what's very exciting is, as we speak, the Congress is negotiating a stablecoin bill between Chairman McHenry and Ranking Member Waters. I know the Senate is involved, the Treasury is involved, the New York Fed is involved, as is the state. And so that's something that could really set a great pathway, hopefully for both state pathways to have jurisdiction over this, as well as having a federal oversight. And then we would be able to have the regulatory clarity, not only to operate in the country, but also to identify really good U.S. banking partners and have that business relationship and the security around that business relationship that we want to pursue. It's definitely a global market, and we're seeing actions across the board, both in the EU, UK, Singapore. And so this is something that we can see start in the US with our launch and expand.
Exactly. Ripple is playing in a global arena. They're eyeing a $150 billion stablecoin market, which they haven't even entered in the space yet. And there's so much hype around RLUSD. I have no doubt that these guys are going to take a significant portion of significant market share of the stablecoin market. And it's just, think about this. Ripple Labs is staffed with former government officials at the helm, like Rosie Rios, the 43rd treasurer of the U.S. And they've got individuals with pedigrees like Brad Garlinghouse, David Schwartz, significant ties with central banks from around the world and large financial institutions. I mean, this company is not your average company, let alone small startup company out of San Francisco. So big things are to come for Ripple and the team, and congratulations to Ripple and their shareholders. Up on screen, you have I put up a tweet posted today by XRP community leader Vet. This is an interesting post on X, differentiating the role of Ripple's RLUSD versus the XRPL or XRP. It seems to be that there's a misunderstanding between RLUSD and XRP. People believe that RLUSD is going to take place or be the breadwinner or replace the XRP. I don't know where that's coming from, but let me read Vet's tweet. It says, Ripple, or let's see here, Ripple stablecoin doesn't make XRP obsolete. They are complementary. XRP has a privileged role on the XRPL via auto bridging. It can make illiquid pairs or corridors liquid. Hence, it makes cross-border payments more lucrative as the rates get better. And I agree. RLUSD is essentially, it's a digital dollar representing tokenized value or tokenized short-term treasury bills or cash equivalents moving through the network. The XRPL is simply the plumbing or protocol in charge of the execution and settlement of these transactions. Think about it this way. Kind of like an email. Think of this whole transaction or situation as an email. Let me explain. Imagine an email being a digital box holding the information that you type in that email. And now think of RLUSD. RLUSD is a digital box as well, except in that digital box is value that's equivalent to one digital dollar. I believe RLUSD plays a role completely separate from XRP. If anything, RLUSD is will only impact the value of XRP because of the collateral or value that is required to be brought on chain to back up those digital dollars. So again, one is a representation of the value on the network, and one is representation of the network itself. I hope that makes things clear for those that are listening. And thank you, Vet, for putting this tweet up. And thank you for your contributions in the space. Again, for those that are listening, give Vet a follow. He's always putting up X spaces on the daily, and he's a treasure trove of information. Shifting gears to Mt. Gox, as Mt. Gox has announced the repayment to creditors after 10 years. Again, this was a horrible occurrence which crippled the investment journey for many Bitcoin investors worldwide. The payback of funds today follows a series of hacks leading to the closing of Mt. Gox, which was dubbed the leading Bitcoin exchange back in 2014. They processed 70% of Bitcoin transactions at that time. And today, fast forward to today, there are over 170,000 creditors looking to recoup their funds that were stolen on the network. And from what I read, there's potentially more creditors to follow after account verification and other subjectivities are met. And this week, Mt. Gox moved billions of dollars worth of Bitcoin into a hot wallet. Again, I talked about Descent and their cold storage wallet being an offline wallet for added security. Mt. Gox just moved 47,000 Bitcoins, totaling $2.7 billion, into a hot wallet in preparation of repayments. You know, why they put it in a potential hot wallet, I need, if somebody's listening, let me know in the comments below. But for me, this just rings sirens when I'm thinking about this, because here they're putting all these assets, $2.7 billion, into a hot wallet. They just announced it. So if I were a hacker or, someone with bad intentions, I mean, they're just publicly announcing like, hey, we are putting all of our assets into an online wallet. Hackers, come get our funds. That's what this looks at, or to me, this is what it smells like, and it just doesn't look good. But regardless, analysts anticipate a heavy sell-off of Bitcoin as Mt. Gox creditors cash in. I mean, that's to be expected. And then ultimately, we know the market's going to rebound later on. Liquidity is finally being returned back to investors. So if I were these people that couldn't access their liquidity over 10 years, that's exactly what I'm going to do. And let's make note, these creditors aren't getting one for one for their initial investment. They're getting partial back. So this is still a heavy blow. And like DAI puts it, something stinks to the high heavens. I mean, because it really does. All of this is very strange and peculiar. If you ask me, Mt. Gox was originally created by the man I just put on screen here, Jeb McCaleb, who is a former executive of Ripple and creator of the XRPL and Bitcoin network and the sister blockchain Stellar. This gentleman has had his hand in the cookie jar in many projects. But what's just very interesting is Mt. Gox was hacked a few times. From what I read, did the Bitcoin go missing? Did it not? I don't know. Regardless, the exchange was shut down and creditors are now getting paid out 10 years later. And me, coming from the securities industry, formerly working at Link2, when I read 10 years, that 10 years stuck out to me because, in the securities industry, a typical VC fund structure is 10 years, or the time horizon is 10 years. And so I'm not saying that this was a premeditated or orchestrated plan from start to finish, but since I am wearing my tinfoil hat right now, I'd like to think that maybe the goal was to onboard more people into the banking system under the guise of this libertarianism movement. And what better way to onboard a younger generation than to gamify or rebrand many of these traditional financial vehicles under some new shiny branding, bringing these new investors into the system, however, under this new narrative. But regardless, interesting times. I'm going to shift gears from Mt. Gox, but not off the Bitcoin narrative. The Tether-backed German-based public technology company, Northern Data Group, one of the largest Bitcoin mining operations in Europe, they're in the crosshairs right now as two former executives are suing the firm for retaliation and wrongful termination after they attempted to whistleblow and bring awareness to the fraud and lack of reserves for the stablecoin issuer Tether. The plaintiffs, Joshua Porter and Golson Kama, alleged that Northern Data Group was knowingly committing tax evasion to the tune of tens of millions of dollars. Understanding the two were let go immediately after the whistleblowing revealed that the company, Northern Data Group, had fabricated and failed and attempted to cover their tracks. Northern Data Group's illegal activity violates California labor laws and subjects the company to millions of dollars of liability. Digging deeper into this hole, Northern Data Group had used one of the defendants' names, titles, and images in an investor presentation without their permission, which invades privacy, misrepresentation, and endorsement of the company's financial statements. So, very shady activities by one of the largest Bitcoin miners across the pond. I wish them my best, as I believe they have high hopes to take even one of their companies in their AI division public. And again, this is just, I wish them my best because they're a significant player in the Bitcoin network. And, obviously the Bitcoin network is a foundational cornerstone of this emerging digital asset sector. And it's all connected. And so again, it sucks to see one getting taken down or one struggling because it affects the whole ecosystem, especially when it's the number one Bitcoin at the leading the pack. But I think we're going to need these turbulent times in order to see decoupling and other assets reign supreme. Not financial advice, or I don't have a crystal ball. I'm just guessing over here. Shifting gears here from Bitcoin to XDC, the XDC trade network completed its first transaction using electronic promissory note. The team successfully completed a pre-shipment financing transaction, marking a significant advancement in leveraging blockchain technology for trade finance. The use of electronic promissory notes significantly reduces processing times and costs compared to traditional paper-based methods. The transaction, which traditionally would take several days, was completed within minutes. This demonstrates enhanced efficiency and faster settlement times by the network. The transaction highlights the network's enhanced security and transparency as well. The transaction utilized legal entity identifiers, aka LEIs, and this is for promoting transparency and trust. This digital solution creates a secure digital identity, highlighting the due diligence and legal compliance governed under the jurisdiction of Singapore courts. Again, this is a major win for the network, the first of many. So major congratulations to the XCC community for the accomplishments and success. A rising tide, like I said, understand that we're all connected. A rising tide raises all ships. So when one blockchain wins, we all win. And I'm looking forward to having a representative from the XDC network on my channel for an interview very soon. Moving on, BlackRock CEO Larry Fink talks about navigating tomorrow's economy at the Aspen Institute in honor of the 2024 Aspen Ideas Festival. The Aspen Ideas Festival is a premier event that brings together global leaders, thinkers, and innovators to discuss and share transformative ideas across various fields, including arts, science, culture, politics, finance, aka business. In this clip I'm about to play, Larry Fink talks about the future of AI, and he also talks about his concerns for the high debt to GDP ratio. He confirms how the world is predominantly illiquid and the US deficit is higher than ever and is expected to continue its high growth trajectory. He does mention on a positive note how the global capital market growth is strong despite the rising debt. And he mentions the US as a prime location for international capital investment, which is understandable since 40% of our debt is already financed to foreign countries. Larry also confirms that despite the rising debt, the strength of the US capital markets and banking system has been a crucial factor in the US being able to finance its own deficits, making, again, as mentioned, the US a prime location for international capital investment. Let me play this clip now.
The G7 has a debt to GDP of 124. That means they have more debt than their GDP. And historically, it used to be considered something safe around 50% of GDP. In 2000, our U.S. deficit was $8 trillion. So 223 years of building a deficit of $8 trillion. From 2000 then to 2023, we added $23 trillion of deficits. We are now breaking through 100% of debt to GDP as a nation. At the same time, we are seeing a growth in the global capital markets. We're seeing the capital markets in India growing, in Saudi Arabia growing, Japan. The biggest benefit of the United States is the strength of the U.S. capital markets. So even post-financial crisis, we were the fastest economy growing out of the Great Recession. But as we elevated the capital standards in the banking system, we've been able to offset the extraction of debt capacity through the capital markets. And the strength of the United States that no other country has is the strength of our banking system and the strength of the capital markets. That's a blessing, and neither party in the United States nor most parties in Europe are talking about how are we going to grow out of this problem. The CBO has just estimated that our deficits, I think over the next 10 years, are going to go to $50 trillion. This is not funny money. This is a serious, serious problem. And if the capital markets overseas become more developed, that's going to become a better destination for capital. Right now, the U.S. is the greatest location for capital, and that's why we're able to finance our deficits. Other G7 countries like Italy and Japan have deficits far worse than the United States. And the United States is dependent on 40% of international capital to finance our deficits. We have to have a growth agenda, and the only way I know we're going to have a growth agenda is to rebuild our economies and infrastructure, and digitization, decarbonization, rebuilding our infrastructure so we can increase productivity.
Again, I'm not fearful that the U.S. is a laggard in the adoption of these new payment rails built on top of the internet, which was a technology originally created by the U.S. It's no news that the world is illiquid. The U.S. deficit has quadrupled since the early 2000s. We've broken through 100% of debt to GDP, signaling a significant rise in national debt. There is a notable growth in capital markets in countries like India, Saudi Arabia, and Japan, which could potentially attract more international capital. I mean, even away from the U.S., but we'll see what happens. And despite the rising debt, the strength of the U.S. capital markets and banking system has been a crucial factor in financing deficits, making the U.S. a prime location for international capital investments. Maybe that's why we saw Circle move its headquarters back to the U.S. I mean, they're a fintech company, or the fintech company Circle Internet Financial. They recently announced its confidential S1 in advance of a much anticipated liquidity event. So I think that, you know, and then also just friendly reminder, this announcement does come off the heels of Circle's SPAC announcement back in 2021. But regardless, if Circle is going to be a trusted stablecoin issuer tokenizing US treasuries, I would think they'd need to be domiciled right here in our own backyard. But and again, I have Circle up on what I have on screen is Circle's profile on Link2's website, where you can invest in Circle. But right now they're sold out. But before we close out here, I do want to play one short clip featuring the world-renowned developer Quincy Jones, who reminded me of Larry Fink talking about the increasing global debt. Quincy poses a question about what we may be able to do with debt. What if we were able to tokenize the world's debt and allow people to tap into new ways of borrowing against it or using it as an asset? Food for thought as this crypto market continues to develop. Thanks for tuning in.
Like I said before, it's never been done before. Like, I bet a lot of you guys have never even thought about owning somebody else's debt in terms of being able to make, passive income off that, or being able to make interest rate income off that. And maybe you've thought about that too, but most of the time what comes to mind is, oh, I loaned Johnny $20. I hope he pays me back. But hey, imagine being able to loan $20 in a smart contract, have an interest rate on top of that, and then selling that smart contract token to somebody else for $22 or whatever, and being able to pass it along that way.
Amazing. Now, with that being said, smash the like and subscribe button, as it really helps me lift my channel off the ground. Also, if you have any questions for me, drop them in the comments below. And I appreciate you all stopping by and sharing your time with me. I hope you have a great rest of your day and weekend. Love you mucho.